My next guest should have some idea. The miners are among Ian Henderson's top holdings. He has $9 billion under management in his portfolio at JPMorgan Chase, and he joins us now. Very good to see you, Ian. What about those miners? Are you still bullish on them?
Well, I have remained very much in the camp that the long-term story for the mining sector remains extremely favourable. China does continue to grow despite what's happening in the Western world. China's got huge foreign exchange reserves, and the mining sector is very cheap.
And that's despite those figures that we had from Hong Kong earlier in the week saying a slowdown, and there's a sort of like feelings that China really is slowing down, maybe more than the actual figures suggest. You're still thinking longer term, we're going to be fine.
Well, they're still building 10 million new homes this year, which is absolutely amazing. I mean, to actually achieve that level of construction is something that no other country in the world can possibly do. I cannot believe that given the foreign exchange reserve that China has, it has got any substantial economic problems.
Have you taken advantage of the recent fall in some miners to add to your portfolio?
Well, in fact, our actions are really dependent upon what our investors do. And despite the long-term story, it is clear that investors have been nervous in the recent past. We have seen some investors take some money off the table. We ourselves have held our course steady. We remain slightly overweight to gold and precious metals. We like the base metals area, but we have not been making huge changes to our portfolio.
And what about copper? It's been declining on speculation about more sluggish growth in China. What are the longer-term fundamentals as far as that's concerned?
Well, I mean, the interesting thing, you say it's been declining, but actually the premium being paid in China for copper for delivery today has been accelerating, has been increasing. So, in fact, copper demand in China has actually been picking up over the past few days. The prospects for copper are obviously dependent upon supply. We are seeing declines in supply out of Chile, which continues to be a problem, and the market remains very tight.
The market also remains incredibly volatile, and there is that flight to safety that we've seen over the past few weeks in many sectors. You did just mention that some clients may be pulling their money away from some of the funds that you manage. Have you seen big withdrawals over the past few weeks?
We haven't seen big withdrawals at all, but clearly there are people who are market timers, and there are people who tend to be a bit nervous. In fact, yesterday we saw positive flows. So, I mean, it's not been a one-way street by any manner of means. But that being said, when markets are nervous, investors do get nervous.
What about QE3 coming in the United States? Do you think that would actually help things and certainly help the commodity industries?
Well, I think if interest rates are zero, the attraction of hard assets is enhanced, and clearly that has had an impact, particularly on precious metals and gold.
When you look around Europe, we've had those GDP figures from Germany, rather disappointing today. Is there any hope in these markets at the moment, or do you think actually, as a number of people have been saying, we're pretty much on the edge of a pretty steep precipice here?
Well, I think my own view is that the third quarter of this year will see better economic numbers coming out around the world than the second quarter. And the reason for that is the second quarter was definitely affected by Fukushima, the fact that Japan was not producing so much in the way of components. Quite a number of industries had to pare back their production. And now that Japan has recovered remarkably well, actually those short-term influences will have disappeared. So actually I think that the third quarter will see a more stable environment than the second quarter of 2011.
And if you're looking ahead to that second half, what are the top stocks that maybe you should be looking at that you would actually pick? What's taking your fancy in?
Well, we still very much like bulk commodity producers, and that does include iron ore. In Australia, there's a company called Fortescue Metals, which is a growing iron ore producer. And amongst the majors, most of the majors are involved in bulk commodities. That does include Rio Tinto, of course. We think it's surprising how Xstrata has been hit post its results. perhaps some concerns about capital costs.
Glencore?
Glencore is it's a mixed business because it's defensive in one sense because the trading business will continue regardless of what happens. It does trade at a premium to other commodity traders. It's extremely well managed as a business, and as a long-term business, it is attractive. It is because it is a mixture of trading and copper producing. People have to recognise it isn't a pure commodity producer.
Okay, Ian Henderson, we have to leave it there. Very good to talk to you. Thank you very much indeed for joining us on Bloomberg today.